Hello, everyone. My name is Daniel Veronin, student at the University of California, Santa Barbara, and retail specialist. Welcome to my third case study video here on this channel, as we have covered popular companies such as Kroger Company in the first video and Kmart Corporation in the last video. Decided to keep on with this trend and explore Toys R Us, what used to be an American staple in the community and what's going on with the present times with Toys R Us, really what's going on. So in today's case study, we'll be delving into those topics and let's get right at it. So here are the table of contents that we will be exploring today in our case study video. First, we'll be introducing the case study. What is Toys R Us? Maybe you, the audience, were not raised or lived in an area with a Toys R Us, or you might be in a country watching this video saying, what is Toys R Us? We will be exploring what the company was, factors of closing United States operations in 2018, the impact on toy sales in retail during the holiday season of 2018, the relaunch and closure again of Toys R Us in the United States, where are they now, and the conclusion of our case study. So here's the introduction to the case study that we'll be talking about today. In 2018, it was a tough year for Toys R Us. They struggled with a Chapter 11 bankruptcy that they filed the previous year in 2017, and with their crushing debt and declining sales, it ultimately put them out of business alongside other major companies due to the ever-changing retail environment and customer taste in the toy industry. However, Amazon and the factor of the changing retail environment are not the only factors that have influenced corporate to cease operations in the United States. Sure, we do have a changing retail environment and Amazon alongside the e-commerce websites and operations taking that stake in sales. However, there are other factors that also help put them out of business, which we'll be exploring today. With operations seized in the United States, we delve into what's caused this decision, how it affected the toy sales for the upcoming holiday season, and where are they now to see what truly is going on with the company. Because another reason why I made this video is because it was recently announced that Toys R Us will be in Macy's stores starting next year, and they already are selling their products on the Macy's website. So just to clarify, just wanted to give some analogy of what's going on and what happened in the past as well. Now, if you don't know what a Toys R Us is, well, you're in luck. We're going to be explaining of what a Toys R Us is and why why it's so significant as well. So Toys R Us was an American retail chain that sold toys, baby products, and clothing that primarily targeted children as their main audience. Of course, you have babies, infants, toddlers, and small children, and they really attracted them with their products as a main base and saying, "Hey guys," well, not to the children, of course, because they don't have money. They attracted the parents saying, "Hey guys, look, here's stuff for your kids. Buy them, please." With over 700 stores before they liquidated all their stores in the United States, the chain went from a main staple during the holiday season for children to shutting down United States operations in 2018 from a bankruptcy Chapter 11 they had filed in September of 2017. As mentioned previously, while Toys R Us still operates in international countries such as Canada and other continents such as Asia, we'll be going over the United States chain and its demise overall. Covering Toys R Us in an international branch in other continents and their demise in those continents or individual countries is too much to talk about in this video. I know my videos are long. I don't want to make them more long by being in 40 minutes, right? So we're just going to cover the United States operations and what Toys R Us stood for. So if you don't know what Toys R Us is, the first bullet point is what it basically is, and we're just going to go off of that. Factors of closing United States operations for Toys R Us. The first factor that is ultimately described as the main stake, and not a lot of people know about it, is a private buyout that occurred with Toys R Us back in the mid 2000s. In 2005, in order to reorganize the company and their focus on the retail market for toys primarily, Toys R Us was acquired through a leveraged buyout by two private equity firms, which are Colbert Kravis Roberts and Company and Bain Capital Incorporated, alongside a real estate developer, which is Vernado Realty Trust, for approximately $6.6 billion. That is a lot of money. That is too much money. Toys R Us was a main company back in the mid 2000s. They weren't bankrupt, they weren't going nowhere. They just had to reorganize their company to go in the right direction due to the turn of the 21st century and onwards going to a new decade. So this leverage buyout might have been the best choice for them. While this may have seemed like a good choice for this leverage buyout to get the company on a good track and remain competitive in the growing toy market, a continual lack of sales, which we'll discuss in the next slide as our another factor why this led to closing U.S. operations, and the crushing debt that this buyout imposed on the company led to a demise through closing stores, laying off employees, and further drifting them from the path of success they had intentionally hoped for in 2005. With private buyouts or leverage buyouts in this case, the main thing that companies want to aim for when being bought out by other individual companies is that cash flow needs to remain constant in stores or their operations in order to pay out the debt that they have marketed for. With Toys R Us, they did hope that their stores, their retail brick and mortar and online operations hoped that there would be a continuous flow so they could pay off the $6.6 billion in debt due to the leverage buyout. However, this did not go as planned, as we'll describe in the next slide, and this ultimately was a long-term burden towards the company to ultimately lead them as one of the main factors in closing the U.S. operations in 2018. So why couldn't they operate a steady cash flow? Why couldn't they buy out the leverage buyout and their long-term debt increase towards 2018? Well, a lack of sales and rising competition. Although the late 20th century proved to be successful for Toys R Us in the 1980s and 1990s with a well-established customer base and a hyped toy market, the turn of the 21st century proved to be devastating to sales for Toys R Us. With a changing customer taste of buying toys, and other related products in markets that have groceries and other essential items in them, such as Walmart, Kmart, Target, etc., Toys R Us had rising competition amongst the market of companies with stores that are a one-stop shop. So one-stop shop stores are stores, of course, that have everything in them. With, I didn't mention this, with Costco or Target or Kmart or Walmart, they had all the essential needs that you need, such as groceries or electronics or well, Toys R Us had electronics, but main electronics such as televisions, hardware, garden plants, groceries, and you had toys in them as well. And with these companies ramping up their toy departments to offer that one-stop shop feel, Toys R Us essentially became useless to shop at or not as significant than shopping at these one-stop shop stores. So with this rising competition, there was a lack of sales that went through the early 21st century overall. Alongside rising competition between one-stop shop stores, Toys R Us also failed to adapt with the 21st century with a lack of updates in their stores and the hype with the internet craze. Although they did have a dominant website with good sales in it, the company never broke through in this category and fell to companies such as Amazon, who offered and continue to offer convenience in purchasing all necessities, including toys and other related items, from the comfort of people's homes. Toys R Us did have a strong e-commerce presence in the mid 2000s, and people were questioning, well, if they had such a good e-commerce development and stance in the mid 2000s, why did they fail? Well, with lack of updates for that website and a fail to fulfill things they wanted, including the private buyout, that's where everything went wrong. This ultimately became another burden, a lack of sales and market competition towards factors of closing their United States operations. The third factor, which is actually a main factor, is who wants Toys R Us? And this is a factor that occurred when the time came of Toys R Us closing their United States operations in 2018. And this isn't on the slide, but I wanted to add on to this. So in September 2017, they filed for bankruptcy and they were looking for another buyer to purchase their assets, including the brick and mortar stores. When the time came, no one wanted to buy Toys R Us, which is what we're going to explain right now. An important factor to note in companies with brick and mortar spaces is that buying and selling properties is a key aspect in receiving income. A popular example of a company that has been trading, buying, and selling properties as a core value of their business has been Transform Co., which I described in my last video, is formerly Sears Holdings Corporations with Kmart and Sears. As the company is owned by Edward Lampert's ESL Investments, which is a real estate company, they now primarily operate Transform Co.'s business model in buying and selling properties through redevelopment and then attracting retailers/markets to accumulate cash assets for the company. So with owning this real estate property and buying and selling or even redeveloping the properties, they make it more attractive. With Toys R Us, the properties that they owned were unattractive to many possible tenants and did not sell their stores during their operational years. Even with Transform Co., there are popular examples of malls going out of business and malls becoming extinct basically across the United States. And those properties may seem attractive to some, but not attractive to others. I know with Kmart, they've been selling a lot of their properties to Target so they could create stores there, or others, including Sears, selling the properties so they could be redeveloped. But some of those properties, majority of those properties, never become redeveloped. And with the case of Toys R Us, nobody really wanted all of those standalone stores or stores in shopping centers because they seemed unattractive. As the properties were in locations that were insignificant to attract possible buyers alongside the massive size the storefronts held, it is safe to say, with their crushing depth, that many spaces were not filled immediately, but through the span of several years. This practically made Toys R Us dead to many companies in making the choice of having no buyers, which is one of the main reasons why Toys R Us liquidated all of their US operations by the end of 2018. A lot of buyers were skeptical of how the company was operating with their crushing debt and what inventory they might have had or not in those stores. So it was a risky buy, and therefore that was one of the main factors of why they closed their US operations in 2018 alongside the lack of sales and also the private buyout, which started the whole fiasco in the first place. Next is the impact on toy sales and retail that the liquidation of Toys R Us had in US operations in the holiday season of 2018. As Toys R Us liquidated assets in the United States by late June 2018, people and companies began speculating about the decline in sales for the upcoming holiday season. Obviously, if a main toy chain or main toy industry liquidates in the middle of the year, of course, it's going to affect the holiday season. But how is it going to affect it was divided. It was going to have a huge effect by double digits falling, or only by single digits, or maybe, just maybe, if Amazon, Target, Walmart, and other retail stores, no matter if they're e-commerce or brick and mortar, how are they gonna really revamp their toy market in order to accumulate for these losses and even make a profit maybe? Because for the past 4 years, the toy market has been on an increase and a consecutive positive margin. And to see a loss in the toy market was unthinkable during that time. So just wanted to see what happened. With such a large share in primarily toys and other related goods, Toys R Us left a big gap for companies to fill in order to strengthen the toy market for millions of families across the United States. Stories of companies such as Target buffing up their toy department emerged in order to take advantage of Toys R Us closing and to claim an unclaimed market for toys. Stories speculated and were rising of Target really revamping the toy department for the holiday season in order to take advantage of the stake left by Toys R Us. Although some speculated that the toy industry would decline by double digits, the NPD, which is a market research group, released a statement that it only decreased by 2% after 4 years of consecutive growth in the toy market. So 2% isn't actually that bad. I mean, imagine the stake that Toys R Us had. I mean, with over 500 stores and so much to have in their assets, their cash assets, billions of dollars, it only decreased by 2%, which isn't a lot. So that means that it worked for Target, Walmart, Amazon, and other retail stores or e-commerce sites to really buffen up their toy department so that they would have a pretty good stake. This statistic both proved the impact that liquidation had on the toy industry and how buffing up toy departments in certain companies/stores helped balance out the bucks and accumulating less losses than expected. Relaunch and closure again. So Toys R Us came back from the dead. They said, haha, you guys thought we're dead. All right, let's open up stores. And then, of course, they closed again, which we're going to explain right now. True Kids, the then parent company of Toys R Us, planned in December 2019 to bring back the brand by opening two small format stores in two malls located in Houston, Texas, which is the Galleria, and Paramus, New Jersey, Westfield Garden State Plaza. Now, True Kids wasn't the original owner that we have described with that real estate company and private investments. This is a new company that actually bought out Toys R Us and they said, okay, let's redevelop it as an e-commerce website and eventually as a brick and mortar store with two stores opening in this in the holiday season of 2019. These stores open in the holiday season 2019 in hopes of bringing back the brand with new brick and mortar presence in order to gain attraction in order to open more physical retail stores later in 2020. Well, that was a joke because in 2020, it was a disastrous year for retail companies due to the large event that occurred, which we all know as COVID-19. So all non-essential businesses such as Toys R Us and other department stores that were not selling groceries or essential goods all had to close. Due to COVID-19 and the forced closure of non-essential businesses, True Kids quietly closed its locations after a year of operation, with the Houston location closing on January 15, 2021, and the Paramus location closing 11 days later on January 26, 2021. So not even a year, well, a little over a year later, they decided to just close these stores, and that was the end of that. Nothing really significant happened, and they were now essentially dead again in the United States. However, where are they now? You see a little sneak peek on the little image on the slide of that they're back. So let's see what's going on again. However, as mentioned in the last slide, this closure of stores did not stop True Kids from further exploring the revival of the brand in physical stores. So they're saying, interesting. How can we milk a famous United States chain? Let's think about it. In March 2021, WHP Global, a brand management firm, acquired a controlling stake in True Kids and Toys R Us. So now we have another brand owning Toys R Us and trying to revamp their model in there. Under this new ownership, news was announced that Toys R Us products would be sold in Macy's locations in 2022. So now we're going for a store in a store model. There is not a lot of expenses covered because you would have the toys there and you're not paying such a high lease or rent in the property, and you're able to have a dominant stance with Macy's department store. So it's a win-win for these guys, hopefully. Of course, with their inventory being in Macy's locations by 2022, it's already on their website where you could purchase them. I'm not saying that this video is sponsored by Toys R Us, but it's out there. Alongside opening these stores, store-in-a-store concepts, WHP also announced it will be reopening physical locations, including pop-up locations and even airport shops to further evaluate their profitability and accessibility in a far smaller format environment in the retail business. Will this happen? Let me know what you think in the comments of what might happen with the future of Toys R Us, including their physical stores, or they might close them again, or never happen because they go bankrupt. You never know. So let me know what's going to happen. And we have our conclusion. So, in conclusion, just to recap, Toys R Us was an American retail chain that sold toys, baby products, and other items targeted towards children that peaked at over 700 store locations before they liquidated operations in the United States. Factors such as a massive private buyout and changing customer taste towards the toy industry led to their demise in 2018. This gap in the toy industry led to a decrease in sales and an overhaul on how companies took charge in advertising and selling their toys onwards or towards their demographics. However, Toys R Us will reemerge in smaller format stores but would later close them due to COVID-19. Under a new owner and plans to reopen again, we wait to see what will occur soon for the once iconic brand. Great. This was a shorter video. It seemed like a lot of slides, but it was easy to explain because you just wanted to introduce the brand, their liquidation, what factors led to those liquidations, and where are they now. So just a little recap of what happened to Toys R Us and where are they now in the United States. So that's about it. So thank you very much for watching this video. Iconic Toys R Us logo right there, the other one. Um, and stay tuned for another case study video where I'll be going over something. We'll see what happens. So thank you guys. Stay safe and well, and thank you for tuning in.